let's start with Liquidation Entrepreneurship Relief, which was it you, Robert, who mentioned that? Okay, so over to you, my friend. Do you want to share a scenario, and then we'll try and answer that question, or I'll try and answer that question for you? If you're comfortable, if you're not, you don't have to.
No, if we have, we currently have HMOs.
You're on camera, that's going to be on YouTube, by the way, the whole world's going to find out if you're okay with it.
Yeah, if HMOs are becoming particularly problematic at the moment with fuel bills going up and landlords having to pay the utilities.
Yep.
So we're considering offloading some of the HMOs we've got. So that's the situation that we're in at the moment.
Okay. And you want to claim entrepreneurs relief on those HMOs?
Can you do that?
No.
No, because it's not a business. Because it's not set up as a business.
No. It is a business, by the way.
Right.
Which I'll cover. It's not trading. Oliver, you owe me £50, by the way. If anybody's phone goes off, if it's a trading business, you can claim entrepreneurs relief. If it's an investment, you can't, which I'm going to cover a bit later on for you. How many HMOs do you have?
2.
In total, and you're looking to sell both?
Well, we're considering it at the moment, yeah.
Okay. And are you doing service accommodation by any chance?
No.
Let's try and do some numbers. How much did you buy the HMOs for?
100.
Round figures will be fine.
200, and both of them about 200.
Each?
Yeah.
So 200 grand. Is it okay for you, Kieran? So 200 grand times 2 gives us £400,000. And how much are they worth now?
Probably double that.
So 400 grand, yeah? Each. So, and have you spent any money on improvements?
Yeah, some.
Roughly speaking, let's call it 100 grand.
Yeah, that's right.
Okay. So I'll put improvements 100 grand. So that gives you 700 grand minus your 400 grand, which is the initial price, purchase price, gives you £300,000. I'm going to keep it really simple here. You get something called an annual exemption for capital gains tax purposes. We're going to ignore all that stuff to keep it really easy. So on £300,000, Robert, how much tax are you going to pay? And I'm going to assume you're a high rate taxpayer. Even if you're not, don't worry about it.
40%.
Okay, so on 300 grand of selling property, what rate of tax are you going to pay?
40%.
You think? Okay, does everybody agree with Robert, or do you think it's a different percentage? Dawn thinks it's different. Dawn?
28.
Dawn says 28.
Is it in a company?
So he's got a company.
Company or your own name?
Own name.
Own name.
Yeah, so it's a company.
So are you with Robert at 40%, or are you with Dawn at 28%? This table here. Dawn, come on, Dawn, you're quiet. What's wrong with you?
Sorry.
Usually she can't stop talking. She talks more than I do.
You want the tax to be different if you're under a base name, because if you've got it in your own name, you pay more tax, but if you're in a company, you're paying less
Yeah,
tax.
so this is these properties are in Peter's name.
He's probably paying more tax, probably.
Yeah.
I don't know the tax system, but I know for a fact that you're probably paying more tax because I think under, I don't know what it is, but from what I've learned, Section 24, when it came into effect, when you had your own limited company from 1993 to 2017, when Section 24 came into effect, all people's names in a standing in yourself, you're paying more tax.
That's right.
When it was changed from 2017 onwards, you're paying less tax because of the difference, because it had to be put into a company-based name. From what I've learned and said was.
You're right, but that's income tax and corporation tax. Here we're talking about capital gains tax.
I'd probably say probably a bit more, maybe. Have you got a job?
Where are you?
Manchester-wise?
No, in terms of numbers, is it 40%?
I'd probably say about 45, maybe.
45% over here. Mark, wasn't it? Mark?
Well, I was going to say it's just capital gains tax. So
It is.
20%.
So Mark, so Mark says 20%.
28%.
28.
Sorry, 20. Forgive me. 28.
Yeah.
Robert says 40. Dawn says 28. One is it Michael, wasn't it?
No, I don't.
Forgive me, Adam. Adam says 45%. So where's this table? 28. Are you all agreed, Darren?
No idea.
No idea. Are you all agreed with Rob, Mark?
28.
28, Oliver?
28.
28. Oh, are you all with Dawn?
Depends if he's got another job.
So he wants to make it even more complicated for you, Robert, okay? The good news I have for you, Robert, is you're not paying 40%, you're paying 28%. So we've just saved you 12%, okay? So we're going to charge, how much are we going to charge, Robert, by the way, for that advice? We're giving him a saving. 500 quid? 6%. So you keep half, we keep half, all of us.
Okay.
Yep. So
I could do.
28% of 300 grand is what? Let's just call it 75 grand or whatever. It's not that, it's a bit higher, but okay? So now let's see if we can get you to pay less tax. Does anybody have any ideas of what Robert could do to possibly pay less tax? Dawn?
Sell one year, sell 1 year after.
So if you sell one year, you sell 1 year, one the year after, you're going to get a small saving because you're going to use your annual exemption. I'll put AE for capital gains tax purposes, yeah? So it'd be a small saving for our purposes to keep the numbers easy. You're going to save 13,000 times 28%, okay? So it's a small figure, let's just call it 3 grand. It ain't 3 grand, but let's keep it really simple. Remember, this is the first one I'm doing in 3 years, so mine's not working that quickly. Back to you, Dawn.
If it's in him and his wife's name, they're both.
Okay, so if it's in you and your wife's name, okay, we're going to times it by 2, makes it 6 grand. Does anybody else have their hand up for any other ideas? Anel, any ideas?
I was just going to say, I don't know if I zoned out when we discussed it, but obviously you touched on it, all the improvements that were made, you can deduct that before you pay the capital gains.
Okay.
Yeah.
Dana,
Well,
then Dawn, and then we're going to get to the answer.
convert that into a savings, he can claim up to 40% in capital allowances.
Okay. You're heading in the right direction, but you're not there yet. Dawn and then Darren, and then we'll get to the answer.
If you lived in the property, which potentially you haven't, then you can claim relief.
You can. Have you lived in either property? No, says Pete.
Not full time, no.
No. Okay. Darren?
Is there any benefit of the properties being owned by 2 people and the capital gains tax being divided by 2 and then there being less of a percentage, or not?
No. Because we just assumed the high rate tax base. So this is what you can do, Peter. Is if you turn both of those units into service accommodation, run them for 2 years, okay, 2 years, and then claim entrepreneur's relief, and then only pay 10% tax. To keep the numbers really easy, over here, the tax is, we said 75 grand, which isn't 75 grand, it's a bit higher than 75 grand. I think it's 81,000, but leave it at 75. If you pay 10% tax, you're paying 30 grand versus 75 grand, so you got a huge saving there. Okay? An entrepreneur's relief is where you've got a lifetime limit of £1 million. You pay 10% tax on the sale of your business. So I'll turn both units into SA, run it for 2 years, because you have to run it for 2 years to qualify for entrepreneur's relief. And then you and your life partner, if you have one, I'd say try and sell both units at the same time, so you've sold the entire business, because you have to either sell the entire business or a significant part of it. And if you sell them separately, it's not going to be enough. So sell both units to one particular operator, and you pay 10% tax, and that's going to be the lowest rate you can pay. How does that sound?
Just repeat what entrepreneur's relief was again.
So entrepreneur's relief is where you sell a business, or you cease trading, or you sell a significant part of your business, and this significant part is hard to quantify or qualify unless you have a business where you can break it up into 2. So let's say, for example, you have a shop and you also have an online business. If you sold the online business, that would be okay. Or if you sold the shop, it would be okay, because it's 2 separate businesses. But if you sell part of your shop, you can't claim entrepreneur's relief. So sell or cease trading, or sell a significant part which you can break up. You have to own the business or the shares for 2 years or longer, and lifetime limit is £1 million. So in this case here, I'll come to you in a second. If this case here, if Peter makes £300,000, he's got £700,000 remaining for the entirety of his life. Okay, and we'll come to you in a second. We'll go over there, then to Peter and sorry, Robert. Why do I keep calling you Peter?
Like Peter.
Robert, and then over there. People call me Shaz, Naz, Maz, Kaz, all sorts. So don't mind Robert. Over to you, sir.
With our property, my brother and I own the property, the land.
Yep.
Privately, and we rent for years. It's been rented to family business, which is a limited company.
So do you charge rent?
Yes.
Okay.
So if we sell the land, can we make sure entrepreneurs allowed on that?
No. However, for future purposes, if you own a property and your business uses the property and you don't charge rent, if you sell that business with the property or with the land or property or without it within 2 years, so to the same buyer or to somebody else within 2 years, then you can claim entrepreneur's relief on that part. But if you rent it out to your own business or somebody else, then you move from trading to investment, and investment businesses can't claim entrepreneur's relief. So unfortunately, you can't claim ER, but there might be other things you can do, which we can talk about.
What about if you were to?
We'll come to you in a second, Mark.
What about if you were to sell the land and the business to a company? We get a tax relief, and then they sell the land and keep the property.
We're going to do this for you as well. How's that?
Because they wouldn't have any capital gains tax to pay. They'll be selling it.
We'll do a calculation at some point this morning, okay, or early afternoon. Mark.
Okay, I have a personal situation as well, which I would be happy to share. I'm a GP. I own my own practice in partnership with my partners.
Okay.
And my partners are going to Australia because they can go to Australia, work half the time for double the money.
Yep.
Leaving just me behind. If I close the practice.
Yep.
And therefore I'm getting rid of a significant part of my business.
All of it, isn't it?
All of it, yeah. Now, if I sold the property and the building, I have been getting a notional rent from the NHS for us to operate as an NHS practice for years. Would I be entitled to entrepreneur's relief on that sale?
So who owns the premises?
Well, we do, but,
Yeah.
but the bank does, really.
Yeah. And I mean, I don't know exactly how the NHS works in this particular scenario. So why are they paying you rent? Just so I can...
Because we're independent contractors to the NHS to provide NHS services from our premises.
So are they paying you a fee, or are they actually paying you rent?
They call it notional rent.
Okay, so you want to find out if it's called notional rent, is it a fee for you to trade, or is it actually rent linked?
It's a rent for the property to be used as an NHS practice.
Yeah, that's not going to work then. It's not going to work because
so therefore it'll be capital gains tax.
It'd be capital gains tax, yeah. Unfortunately, yeah. Anybody else on that? Back to Robert.
If these HMOs are converted to SA, do you have to show trading accounts for the 2 years that you say they're SA?
Yes.
So even if you put them on sort of booking.com and you don't get any takers for SA, the fact that you put them on booking.com doesn't count. You have to actually show trading.
Now we're going down a very different path. And Oliver, my friend, we have a question here for you from Robert.
I'll answer it, yeah.
AKA Peter, who says, if he turns his units into service accommodation,
yes, and
doesn't get any customers, is it still an SA business? And the reason why I ask you is because on Monday night I covered this and you were taking notes.
If it's not had, I can't see how you wouldn't have customers in the current market, but...
Let's say he hasn't.
Okay, I'd say it's not a business because it's not traded, so That's my answer.
Okay, let's say, and then we'll come to you in a second. Let's say Robert has had 5 customers in the last 2 years.
It would start to look divisive to me. It would look like a duck thing, wouldn't it? You know, like you had a personal family holiday let and you'd a few times chucked it out. So to me, walks like a duck. Yeah, that's not a business in a current climate.
We don't like Oliver, Robert. We don't like him.
Well, you might go swing it. He was there as well. He might have interpretation.
Were you there as well?
In Ipswich, yes.
Oh, forgive me. Yeah. You were nice and quiet and polite, but this guy just talks too much, doesn't he?
If I get it wrong, I want to show him up.
Yeah.
I was just going to say, like, if it's been genuinely able to be let, then yeah, it's fine. So someone could have booked it, but they just didn't. So.
Okay, we have Dawn.
The business.
So I can't remember the exact numbers. It has to be available, and you have to prove that it's available to let for so many weeks of the year. I can't remember the numbers, but it has to also be actually let. And I think it's for 210.
We're going to come to that. I'll come to that. So there's an important point that Dawn's made here, without making it. Does that make sense? And that, I'll tell you why. Because Dawn has picked up on the fact that she's, and this is a point I made on Monday night as well. Dawn's picked up on the fact that somewhere in her mind there are some rules that trigger, okay, whether you qualify for this or not. And that's the whole point of education and tax. You can never remember everything, neither can I, by the way. But when somebody gives me a scenario, I'm sure there's something somewhere which applies here, and that's the important thing about tax, by the way. And so don't worry about making loads of notes here, by the way. Don't worry about taking a photo of every slide. I know some of you will do, but no matter what I say. But if you can just put it all in your head, and whenever somebody mentions SDLT, Entrepreneurs Relief, capital gains tax, anything else we covered today, somewhere in the back of your head at some point will trigger, there's something there. And then that should be enough for you to go and ask a tax advisor or go online to start researching it and finding out. So Dawn makes an important point. So our friend over here, and I've forgotten your name, sorry? Helen says, okay, you can do because you made it available. Yeah. Dawn says, no, there's some rules. You were there, Pete.
Remembered them. Yes, sorry, it's just sort of come to me.
You've missed a moment, Oliver. It's too late now. You missed the boat. It's over to Pete now.
Yes.
Pete.
Oh, I've got on test.
What? I was busy writing when
available so many days.
Yeah.
So many days, do you remember?
Yeah, it was available for
2 days.
150. Was it available to 90, and then you had to have a minimum of 10 rentals?
105.
105. I don't remember that.
Okay, so we'll cover that bit, but I shared 2 different scenarios, if you recall. So the first one is, if you run service accommodation, Robert, and you go down the furnished holiday let route, okay? Those are the rules that Pete is talking about with the assistance of Oliver and Dawn, which is a property has to be available for letting for 210 days. That means you make it available as in market for commercial letting. So like Oliver said, family and friends discounted doesn't count. Commercial let available. It has to be actually let out for 105 days. So that's rule number 2. And the third rule is, if it's let out for more than 155 days, okay, to any one person, or let out for more than 31 days, to any one person, and those 31 days accumulated add up to 155 days or more, then you don't qualify for service accommodation. So let me give you an example. Robert rents out this property for 32 days to 5 different people in 5 different months, of course, okay, and that adds up to, so that breaches the more than 31 day, because it's 32 days. He's done it 5 times. That goes over 155 days. He does not qualify for furnished holiday lets. Okay? So 1, 210, 105, 155. The good thing is this, by the way, and we're not going to cover this too deeply, is if Robert has 2 or more furnished holiday lets, he can use something called averaging and something called the period of grace. Don't need to worry about it for today. And average out. So if one property doesn't meet the 105-day test, so he's rented it out for 85 days,
the year the property is 195 days, he can add both of those together, and as long as both average out to 105, he'll be okay. Again, you don't need to worry about this for today. Yes, sir.
Is the 210 days, is that per year or is that a 2-year period?
So that's per calendar year. However, for the first year that you start, it's from the day you start your business. Second year onwards, it's every single tax year, 6th of April to the following 5th of April, and the year that you cease trading is the last 365 days. So for the first and last, it's different. All the years in between is the start of the tax year, the end of the tax year. Okay?
If he would transfer the property to companies, would save him?
No.
He would have to pay 20%?
No, unfortunately not, no. So,
It has to be serviced accommodation.
sorry?
It has to be serviced.
It has to be service accommodation. So that's your first option, Robert. Your second option is you move it to service accommodation or service apartments, but you make it like a bed and breakfast. In which case, these rules don't apply. So you're running a bed and breakfast business for 2 years, and after 2 years, you then sell it on to somebody else as serviced apartments, bed and breakfast, hotel, call it what you like. What that means in a nutshell, Robert, is you have to offer more services than just renting a room per night. And then you'll be okay.
Would bed and breakfast be sort of a fruit bowl and some croissant and yogurt in the fridge, or is it just...
I would, to be on the safe side, Oliver, try and include as much as I can in there and not just a fruit bowl and some...
Well, you know what I mean, like the continental breakfast that's provided within the apartment, kind of. Because that's breakfast, isn't it?
I'd go a bit further.
Right, okay.
I'd go a bit further, because I think that alone isn't going to be enough.
Right, okay.
Yeah?
Cooking solidifies it, does it?
Cooking, yeah, that's right.
Thank you.
Yeah, and try and offer other services that maybe hotels do, which aren't that onerous. Okay.
You know, station collection, that kind of thing.
You got it, yeah, that kind of stuff. And that will get you to where you need to be, Robert. You okay with that?
Yep.
Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.